blokfin.club is not a registered investment, legal, or tax advisor, or a broker-dealer. All investment or financial opinions expressed by blokfin.club are from personal research and experience and are intended as educational material. Although best efforts are made to ensure the accuracy of the information provided, occasionally unintended errors or misprints may occur. blokfin.club shares information that is intended to be used and must be used for entertainment and informational purposes only. It is very important for you to do your own research and analysis before making an investment and base your decisions on your own personal and financial circumstances. You should take independent financial advice from a professional or independently research and verify any information that you find in our videos or on our website if you wish to rely upon them for the purpose of making an investment decision or otherwise. Past performance of any investment mentioned by blokfin.club is no indication of future returns, nor is it indicative of future performance. Keep in mind that investing involves risk. The value of your investments will fluctuate over time and may gain or lose money. All right, what's going on, beautiful people? Chantel with blokfin.club here with another video. So part of the objective of blokfin, part of the objective of blokfin is really to educate and to share information about investing in stocks and crypto, and we like to do that through videos like this where you're kind of learning with me, growing a small account, because I think one of the important things about investing is really you just got to get started and you just got to do, and so what I'm here to do is really to try to motivate you guys. I'm not giving investment advice, let's just get that off the table. But what I am doing is I'm trying to grow my own account, and so I don't mind sharing the information in my growth with you guys. I feel like there's a couple things that I've been doing right, and mostly I've just been getting involved, really, and I think when you approach it with a level head, you have the ability to really see some great gains in investing when you do it for the long term. This isn't like something like a get rich quick scheme. So you really got to put time into it, and you really have to have a good time horizon that you're thinking about to make it worthwhile, I think. So yeah. One of the things I wanted to go into is really when you get into investing, I think it's important to understand what your goals are, and what the obvious objective is in your portfolio that you're building. And don't feel that you have to do everything in one account, because what I'm speaking to is having different outlooks in your investing, and possibly compartmentalizing that and having different accounts that do different things. So case in point, without getting too winded, I'm gonna talk to you guys about my own personal account that I have with TD Ameritrade, and this is an account that I just recently started, and up here you can see that it's got about $586 in it, and it's sitting at about a $1 profit, and that equates to a 0.17% growth on the money that I have in here. And I'll get into talking about exactly what this account is and what my outlook for it is in just a little bit. All right, so stick with me. All right, welcome back. This is Chantel with blokfin.club. And so where we left off last time, I talked about basically having, a particular outlook for your different accounts. One, having multiple accounts. And the reason for that is that, you're trying to implement different mechanisms, I guess you could say, to obviously get to the end goal, right? So, when you're investing, one of the things you can be investing for is growth. One of the things you can be investing for is income, and in particular, I want to talk about investing for income. And so that's to say that, you're investing into something and you're looking for a return on the money that you're investing. And you plan to possibly take that money in as income, right? You want to maybe, set yourself up down the line to where you have a stream of money coming into you in the form of, investment money being put away into whatever it is, and it's paying you either a dividend or interest, much like you would get from a bank account. So with that in mind, this account that I've set up is set up to be an income generating account. And what that means is that the stocks that I invest in this portfolio are all income generating stocks. I believe the only one that isn't an income generating stock, meaning they don't pay a dividend, is NEO. And I had already purchased it in this account at the time, and I didn't feel like selling it, and I just wanted to ride it out. I could easily sell it, I guess, but that does create a tax event. Just keep that in mind, buying and selling. But I just left it in here. But outside of that, every other account is actually paying me a dividend. Every other stock, I should say. And the way we can check that is I can go here at the bottom to dividends and income. Obviously, you guys see at the top, this is a TD Ameritrade account. And you're able to easily set one of these accounts up. You're just going to need some personal identifiable information, license, social security number, and things like that. But yeah, so if I go here to dividend history, I can kind of see, oh, look at that, right? Cash in lieu of fractional shares, FCNCA. Cool. But either way, you can see here, qualified dividend, IIPR, paid me $1.55. Now you might look at that and say, oh man, that's great. But ultimately, it's great relative to the price of that stock, right? So at $1.55, that stock may be $1,000. And at that point, is it really worth it to invest in a stock that's $1,000 and then they're only paying you $1.55 in dividends? Maybe, maybe not, based on your wants, needs, goals. But for me, it makes sense. I had purchased this stock. Let's go back. I had purchased this stock at one point for $93.18. That's what I paid. So this is my cost per share. And I only had one. I bought one. It's pretty expensive. And at the time, I was just starting the account up. But I really believed in this particular stock. And so I bought it, even though it was expensive. But if you see here, the price right now is $1.91. $191.74. And so I've definitely made money on the growth of the stock itself. That equates to 105% growth over the course of time that I've held it. And on top of that, it's been paying me a dividend every 3 months of about $1.50. Okay. And we could go back here and we can see that in the dividend history. If we put a filter on and we say that we want to look for the past, let's look for since 2020. Let's look for 2021, right? We'll apply. Okay, so these are all the dividends that I receive in this account. And I'll make another video about, what particular positions you could possibly get into that pay a monthly dividend, because there are some stocks that do that. But for right now, these are paid on a quarterly dividend. So basically every 3 months, right, I get paid from these positions. And, just kind of show you. I won't X this out just yet, but you can kind of see the list here. And it goes on and on. So CIT, I think that's Citigroup, they paid me $1.10, and that was just in November. IVR paid me $1.47. This one is a pretty interesting one, and I made this video in particular because I was actually going to pick up some more of this. It's a high yield dividend stock, and a lot of times, it's not sustainable that these companies sell for a price of $2.62, but they're paying a dividend of that much. But I'll tell you what, hey, we'll see what happens. All right. So before the market closes, before the market closes, I'm going to go ahead and purchase a few stocks in IVR. Okay. I'm going to go for a market order because I really don't want to deal with a possible issue with the order not getting filled. So it's really close to closing time. Closing time. You didn't know I could sing. Hold on. So it's almost close to closing time. So we're going to try to go ahead and get some of these shares. Now I can't buy 100, but let's see. Maybe we could buy at $2.62. I have $160. Let's say I'll buy like 25 shares. How about that? 25 shares. How about that? All right. So review order. Estimated total $65. Let's do, and boom. All right. That was submitted. Hopefully it will fill. So we'll go ahead and give it a few seconds. Possibly it filled, but we could look down here to see. Oh, it did fill. Let's see, I have 41 shares now. Let's see, details quote. All right. So, yeah. So I actually missed the ex-dividend date, and I'll be doing a segment that's called Word of the Day, where I kind of hash out these different terms so you can understand what they mean. But the ex-dividend date is basically the last day you have to purchase a stock to be included in the dividend payment, right? So that's one way you could get into particular positions is you could buy the stocks during their dividend payout, all right, right before they pay it out. But either way, so I just have bought 25 shares of this IVR stock. Now I have 41.81 shares. So what that means is that what that means is that I'm gonna be getting more of a dividend payment every 3 months from this company. So I'll probably do another video in about 3 months just to kind of show you guys what that looks like. But yeah, that's how it goes. So having obviously a system, but then having a particular goal or outlook for your portfolio is important because it kind of like keeps things in line, So when you get on that portfolio, you understand what your goals are and what your obvious, what you're on track to do as far as, making that account maximized, right? So if I'm in a growth account, there's possibly going to be some risky investments in there, emerging market stocks, possibly, things that are a little bit risky, right? Because you're looking for that growth potential. If you're looking really for just preservation of your account, you're going to be investing in things that don't really move too much. But for me, I'm diversifying my stock portfolio, this one in particular, amongst different sectors, but I'm making sure that every stock is a dividend paying stock, right? And that I'm making some type of an income from them. And so in my mind, it's better than putting my money in a bank account. And the gains section here shows you just that. On SKT, I've made 176% on my money. On IIPR, 106%. On energy transfer, 43%. On ESRT, 38%, so on and so forth. And so I don't want to paint the wrong picture and make it seem like, you're just going to get into these investments and, you're going to see yourself making gains, right? Because it's all about when you get in. Because as we're seeing right now, the market is in a bit of a downturn. And so for anyone who invests in something right now, it's quite likely the price is going to go down. You may be seeing some losses for a period of time before you start seeing some type of retracement, or some type of pullback to the norm. And so I was fortunate in that I was able to get into these positions at a time where they were growing. NEO, it shows here that I gained 25%, but I actually gained, I would say upwards of a couple 100%. I believe when I bought NEO, the price was probably about $4. It's $24 now. So it's like 5x, I've made like 5 to 6x my money on NEO. It's what happened was after I had it in a different account and I saw how well it was doing, I decided to go ahead and purchase it in this portfolio. And I don't really know why I did that, because it's not an income generating stock, but I think that was along the time when I was really figuring out what I was going to do with my different accounts. And so I switched to this model with the TD Ameritrade to say, hey, I'm going to focus on income generating stocks. And so that's where we are now, and that's why NEO's in there. Just a little backstory. So IVR is really the only stock right now that I'm holding that's really at a loss over the long term. And so we're seeing a loss of negative 8%, which isn't horrible. We could easily see that come back, and I'm hopeful about IVR. So we could get into what they are and what they do in a different video. But basically this kind of wraps it up, I think. You can kind of see everything here. The account is not big. You don't have to think that you have to start your account with a large amount of money. It's really you're in this to make some money. So it's really prudent that when you're investing, you really think in percentages. And so it's like if you have an opportunity to take a penny and get 10x out of it, right? So you get a penny, but then you get 10 back. I mean, wouldn't you find yourself as many pennies as you could to just keep doing that? And before you know it, it's like you could have a sizable account if you just kept multiplying 1 penny into 10. And so, there's actually stocks that you can invest in that cost a penny. So, that's really where it is. It's you got to start. You got to start somewhere. Not starting is really where you go wrong, because you miss out on opportunities, and you can't really put a dollar amount on certain opportunities that you miss out on. So yeah. Chantal Bien-Aimé with blokfin.club. Like, comment, and subscribe. That word is seeming to be very difficult for me to pronounce right now. But either way, so like, comment, and subscribe if you like these videos. I'm definitely going to keep doing what I'm doing. But you guys stay up and be safe. We out.
boom.